Grantmakers Impact Investments that Advance Racial Equity Solutions. My name is Carlos Medina, pronouns he, him, his, Learning Services Manager at San Diego Grantmakers. And I will be starting us off today with just reviewing a few elements, some housekeeping elements to get us prepared for today's program. So first, I just wanted to note that if you have any questions during this program, feel free to type them into the chat box located at the bottom of your screen, and we'll do our best to incorporate those questions into today's presentation. Secondly, to notify folks, excuse me, that today's presentation will be recorded. And so you will receive a link to a copy of the recording, follow-up email that will follow this presentation. And lastly, just wanted to let folks know we will put up an evaluation poll at the end of the program. And San Diego Grantmakers really appreciates your time to complete that poll because we utilize that data to improve and enhance our programs. And before I hand things over to Debbie McKeon, President and CEO at San Diego Grantmakers, who will start us off, I just wanted to ask folks as they join if they can please mute themselves and we will get things started. So Debbie, I will hand it over to you.
Thank you. Thank you so much, Carlos, and welcome. And good morning, everyone. It's really a pleasure to be with you here today. San Diego Grantmakers believes firmly in our vision that we are seeking to achieve systems that are equity-centered, that support everyone to be able to assure that they have the potential to reach their full level of prosperity and to thrive, and that our communities thrive. And so, as a funder community, we're constantly looking for ways to help mobilize resources in support of equity-centered solutions. And so it's no surprise that we would be hosting today's program, Impact Investments that Advance Racial Equity Solutions. San Diego Grantmakers is really pleased to produce this series with the support and partnership of our longtime partner member, Bank of America. And I'd like to invite Pam Gabriel, Senior VP and San Diego Market Manager for Bank of America, to share a little bit with us about the work that they're doing and why this series is so important. Because I've seen Pam in action, and I know that she's committed to delivering on the bank's environmental, social, and governance responsibilities for our communities. So it's a pleasure to welcome you, Pam.
Oh, thank you so much, Debbie. It truly is an honor to be here with you and everyone, especially our wonderful speakers, as I noticed many wonderful leaders on our panel today. And so thank you so much for allowing us to have this platform to collaborate together here in San Diego. As Debbie mentioned, my name is Pamela Gabriel, and I am the market manager for San Diego here for Bank of America. We truly are invested in the San Diego community as well as all of our communities throughout the nation, and which is why we are very proud to be the presenting sponsor of this Impact Investing series. As many of us throughout our community and the nation have come together to really think about what we need to do as far as the next steps around racial inequalities, you know, Bank of America is thinking the same. As our executive CEO had said, you know, we must not let the urgency that we feel today to quiet down, and we're truly living up to that as a company in our communities, with our associates, with courageous conversations, and investing back to our partners as well. Earlier this year, we had announced several different large investments back into the communities, but pertinent to this conversation, I really wanted to highlight our announcement of the $250 million in capital as well as $10 million in philanthropic funds, specifically going to CDFIs around to help them with the PPPs processing earlier this year with the coronavirus and such. And so with that, along with the investment that we just announced of the $100 billion over the next 4 years around strengthening our investment around economic mobility, especially with communities of color and racial injustice, and closing those gaps within our communities. With all of this, it truly is something that we are very passionate about and want to ensure that we're giving back to our community. And this Impact Investing series is part of that. I know that we will hear later on from Mr. Robert Villarreal, who everybody seems to know, but also used to be in this particular role, and just recently was also, their organization was a beneficiary of that investment for the CDFIs, in which they did receive a significant amount for capital and philanthropic funding to help them. But just a couple of examples of what we're doing right now, and just to really express why we're so excited to hear from everybody on this panel and for this partnership. And so thank you so much for the opportunity, Debbie, and I will pass it back to you.
Thank you. Thank you so much, Pam, and I appreciate it. And I know whenever you speak here, there's always connector points with the speakers that we have on this series. So I know you're a very important part of this field of practice. So I'd like to give a little context for today's conversation before I turn it over to everyone that I know you're really waiting to have a conversation with. As we think about it, we're living through an inflection point in our collective history. It's the confluence of the long overdue demand for racial and economic justice, together with a global pandemic that is forever changing our nation. And this catalyzes the opportunities for us not to build back, but to build better, to achieve an equitable economic economy for all. And yet, despite the billions that are invested in local businesses every year, our communities most impacted remain structurally neglected. So over the next 10 years, there's an unprecedented wave of social, political, and monetary capital that's going to flow to attempt to repair economic inequities. So we have to mobilize now and shape that capital to build better. So on that note, I'd like to thank you all for joining us today to learn more about how California investors, and specifically San Diego-focused investors, can take leadership by investing to support communities of color. And we're honored to be joined by several experts in this field today. And I'd like to take a moment to introduce them, and then I'll turn it over. And Pamela already mentioned Robert Villarreal, who is our Executive Vice President at CDC Small Business Finance, and he's President of Bankers Small Business CDC of California. And we're joined with Donna DeBerry, who I'm working closely with right now, who's President and CEO of the Central San Diego Black Chamber of Commerce. And Lauren Grattan, co-founder and Chief Community Officer at Mission Driven Finance, also longtime partner of ours. And our moderator today, Omar Passons, who, as you heard in our pre-conversation, we are connected pretty closely on things we're doing. And Omar is the Director of the Office of Integrative Services for the County of San Diego. So without further ado, I'd like to hand the microphone over to one of San Diego's finest leaders, Omar.
Well, thank you very much, Debbie. Can you hear me okay? Okay, so I'm really excited to be a part of this panel. I will say, just as a quick aside, I noticed when Pamela was speaking, her small dog came behind her. And one of the interesting paradoxes of this pandemic is that in some ways, we find ourselves even a little more intimately connected than we would if we were all in some conference room somewhere, right? Or a ballroom or a breakout session or that sort of thing. And it can help us. I work for the Health and Human Services Agency, and one of the big unseen challenges of this pandemic is connection. And so as our panelists, as we move into the core discussion here, I just wanted to sort of lift up that notion that there's a way to frame what we're all experiencing as a shared thing that can actually lead to connection, even while we're talking about and switching into this powerful discussion about advancing racial equity. As we're going to move into just a level set, I'm going to give each of the panelists an opportunity to share some of their insights, and then we'll do a bit of a round robin where there's some additional questions. Carlos will be tracking the chat for questions that may come up from the audience, and about halfway through, we'll start taking in some of those. What could seem odd, before I go to the first question, what could seem odd to folks is, why is the county's Health and Human Services Agency moderating a panel on advancing racial equity? And the reality is that in San Diego County, Black people are 5 times as large a percentage of the homeless population as they make up in the entire region generally, right? We know historically that African Americans are roughly track about twice the unemployment rate of the national average, regardless of where you are. And what this group is lifting up, what Debbie's work is lifting up, is that we need to change some structural aspects to address those issues. And so our vision of healthy, safe, and thriving across the San Diego region, our Live Well San Diego vision, is a big reason that I was excited to stand in here on behalf of the county. So what I'd like to do actually is just jump right in and go to one of our panelists, and maybe we'll start with Robert and then Lauren, and just can you talk a little about the models that you are deploying to advance racial equity in your work? Maybe Robert, and then we'll go to Lauren.
Sure, great. Thank you so much, Omar. You can hear me okay?
Yes.
Okay, great. Thank you, Omar. Thank you, Debbie. And I want to make sure I thank Pamela Gabriel. As she mentioned, CDC Small Business Finance was the recipient of a large grant, helped us stand up our PPP, and we were able to do that $190 million in PPP loans, with 82 going to the state of California. So thank you for that. So CDC Small Business Finance, 42-year-old organization, big SBA lender, Small Business Administration, on both commercial real estate and small business. And about 3 or 4 years ago, we took a step back and said, we need to do a better job of lending to communities of color, to entrepreneurs of color. So we did a couple of things. One is we went out and bought an organization that we had actually managed for 26 years. That is a community development financial institution, or CDFI. You may have heard that term in the news. That is a mission-based organization that works in neighborhoods and delivers capital and services. So we went out and bought the one we were managing. We just managed it. We didn't own it, and we purchased that. And we did a study. We did a study on Latino businesses throughout the state of California. And through that study, we learned a number of things. And because of that, we implemented a new loan fund called the African American Latino Loan Fund, initially launched just in Los Angeles, but about 6 months into it, we said, we need to do this statewide. And one of the things that we learned and that we implemented, a couple of interesting points. One was that you need to create a separate loan fund or product specifically for the community you want to impact. Second, we married our business advising and our lending. They used to be two separate silos, but we put them together and focused very diligently on communities of color and said, if you are an entrepreneur who's a person of color and you're pretty close to being loan ready, but you're not quite there, rather than just saying no or sending them somewhere else, we worked with them and provided them business advising and got them loan ready. And because of that, in the last 3 years, our lending to people of color has gone from about 20 to 23% of what we used to do to about 46% now of our total volume. So we've doubled in the last couple of years. We think we still have a ways to go. We'd like that to be 60 to 70%, but we're making the right steps.
Thank you, Robert. That's really impactful information. And if we can maybe turn to Lauren just to get some insight about mission-driven finance, which has been doing some very, very incredible things both here and in other parts of the country. Lauren?
Thank you. Thank you all for putting this conversation together. It's a critical conversation and one that should be happening all the time, regardless of a pandemic, regardless of civil uprisings around the country. And I'm really honored actually to be back here with Grantmakers. I've been a longtime member. My background was as a nonprofit fundraiser and involved in philanthropy. I've been a member of Grantmakers for about 8 years, but started Mission Driven Finance, an impact investment firm, 4.5 years ago. So a lot of what we started Mission Driven Finance to do came from conversations here at Grantmakers, came from how we saw our community needing to have access to flexible financial tools. We got started working actually with Robert and the team at CDC Small Business Finance and friends from Union Bank as well to see how can we lend creatively using private sources of capital, foundation capital, individual capital, and put that together in ways that meet the needs of our community. So we have a dedicated place-based evergreen private debt fund called Advance, and we've been lending through that for just about 3 years now. And we've put about $5 million out through that. 44% of those dollars have gone to organizations led by people of color. But even beyond that 44%, every single organization that we work with that's part of our portfolio is dedicated to creating a better community. They're creating equitable outcomes in education, health, and wealth, which is what we're all about. As we built that, we also found how we build it is really important. We'll talk a little bit about some of the systems that we can put in place, but folks have already mentioned, how do you be in community? Omar brought up, how can we have connection? And really getting to see and understand and connect with communities and not see them as someone over there, something that has risk, something that doesn't look like what I'm used to, then we can underwrite them. We can build from a place of trust. And so we always are saying that there's tons of reasons to say no to a borrower, but we always look for reasons to say yes. So we look for the opportunity on a forward-looking basis. And Omar mentioned we're working around the country. So as we stood up Advance here in San Diego, we started finding other communities that were finding a similar gap above microfinance, not quite fitting into Pamela's criteria, but falling into the cracks where they could get started, but they couldn't grow. And that's really our sweet spot, where we try and lend and support organizations that are making a really incredible difference on their community, and particularly focused on communities that have been overlooked and underestimated, which tends to be Black, Indigenous, and people of color.
Well, thank you, Lauren. That was really, really, it's good to get that type of grounding and to hear the evolution of mission-driven finance. I hope at some point we'll be able to swing back. And one of the things that you all are doing that's really impressive, that could be useful up and down the state, is leaning into how to work with communities who maybe even just don't traditionally get access to capital because of components of their religious faith. And I think that's an example, especially in our immigrant and refugee populations, that could be useful for folks to know. But before we do that, what I want to do actually is just go to Donna, who's the CEO of the Central San Diego Black Chamber of Commerce, which has, in my time in San Diego, undergone an incredible transformation and evolution in large regards because of Donna's work. And so I just am hoping, Donna, that you could talk a little bit about how the Central San Diego Black Chamber is seeking to facilitate business transformation, and also your thoughts about the key strategic alliances that you all have formed. I'm gonna, this, if I were standing, I'd be like, dancing and waving my hands, trying to, here we go.
I was saying thank you, Debbie and Omar, for inviting me to participate on this panel. Our mission is to create generational wealth. That is what the Central San Diego Black Chamber of Commerce mission is. And it's really impossible to create this generational wealth if Black businesses are systemically discriminated against in competing for economic parity. Our goal, and I think the goal of everyone, not only on this call, but it should be a national goal, is to solve this economic wealth and disparity for the Black community by financially supporting Black businesses. It's been, these last few weeks and months has been difficult. Right now, the Black community is at a critical pivot for us as we are dealing with global health crisis, economic upheaval, and civil unrest over racial injustices and police brutality. And of course, like I said, the Black community is at the center of this and enduring disproportionate, devastating impacts, which has been compounded by some of these collective traumas. And if you look at, just really quick, before the pandemic, Black-owned businesses suffered from historic and persistent underinvestment, even when the economy was booming. So before COVID-19, only 1% of Black business owners obtained loans in their founding year, compared to 7% of white business owners. And so we were already, as of last year, 58% were already suffering from financial distress. So here in San Diego County, Black-owned businesses were definitely disproportionately left out or denied stimulus money and pretty much shut out of the process for loans and grants because of historical practices and policies. And so to respond to that challenge, in partnership with grant makers, we created the Black Business Relief Fund. And when you were asking about our strategic partners, and that is, we also created this strategic alliance. And this alliance consists of the Asian Chamber, the Asian, I can't remember, the Asian Business Alliance, the Hispanic Chamber, and the Black Chamber. And our goal is to come together collectively around advocacy for our communities. But in response to the challenge that the Black businesses were having, like I said, in partnership with grant makers, we developed this blueprint and laid out a long-term and short-term strategy to raise $1 million in 60 days. Now, everyone thought we were crazy, but guess what? We did it in 55 days.
Wow.
So, yeah, and it's just amazing. And I think that in this bold move, we have helped so many different organizations and Black-owned businesses to date, over 200. And we served a variety of, we're serving them not just as it relates to grants, but we're also making sure that they get business development and education to support not just a recovery, but how do we continue to help with business growth.
That is an incredible feat. $1 million, like that much money in 55 days is something that your organization should be proud of. Frankly, our community really, really needs that leadership. And so that's a powerful statement. And I'm glad to be able to hear and learn about that. I have a question for any of the panelists to take. And when we do these types of calls, it's good to lift up stories and also to have a key thing that the people who are watching can really grab onto and take with them and inject into their work. And so I'm actually going to go to one of the things that was listed as sort of the last question, which is for each of the panelists, maybe starting with Lauren this time. Do you have any concrete examples of why and how the current system has to change to work for Black and Latino and businesses of color?
Oh boy. Thanks, Omar. I have two big ones of what needs to change. You mentioned with PPP, and one of the things that we've seen, and even broader beyond that, we work a lot with our immigrant and refugee community here in San Diego. 1 in 4 San Diegans are born outside of the US, so it's a critical part of our community to be able to support newcomers. They're not just people coming from Mexico, though there's no just about that. There is a strong skilled immigrant workforce with our life sciences and tech. There's also, we have one of the largest refugee resettlement sites in the country. So we worked with Somali Family Service, and we provided them with a bridge financing structure to help them with CDBG capital. They got through HUD, through the city, to run a program training and supporting refugee entrepreneurs and starting and growing their businesses. But they needed a bridge to get over that. Most organizations, even on this call, don't really like to lend against a government reimbursement in case that they can't go after you at the county, they can't go after the city. We said that's actually, we look at this as a great opportunity, so we'll do that. They're also a nonprofit, so many folks don't lend to nonprofits. And then as we were underwriting Somali Family Service, they also turned to us and said, would you do this in accordance with Islamic financing principles? And we said, well, not 100% sure what that means yet, but committed to figuring it out and exploring. And everything that we found was really in alignment with our beliefs. How can you line up the motivations of your different partners so they don't participate in interest-bearing structures, many people of Muslim faith? So you can't have a loan that has interest, you can't have a mortgage that has interest. All of these critical building blocks of wealth and generational wealth aren't available to our Muslim community. So having structures that are responsive to faith PPP said loans, 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 fee, 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 interest all over the place. And so I got calls from our refugee community here saying, is there something that we can do to maintain our workforce here in City Heights and in El Cajon? But I can't do this and still feel in alignment with my faith principles. We didn't come to a great solution. It really looked like we needed to use private capital. But that's one of the big things, is being sensitive to and thinking, who do we center when we're designing new programs? What is it? You assume that this a loan structure works well for everyone. You've forgotten that Muslim community is part of everyone. The second thing that I would say is a big shift that we need to make in the system is credit score-based underwriting. We particularly have always said that we don't want to lend based on personal credit scores, because those are in partnership with redlining, lack of generational wealth building through home ownership. They are disproportionately low for Black and Latino communities. And so we said, how can we, instead of driving the car forward by looking in the rearview mirror, look out the dashboard, look out the windshield. How can we look forward into what's possible? It does mean a very different process of lending, but I think that we need to have more character-based lending and more of that, what we've talked about, seeing the opportunity instead of the risk.
Thank you for that. It's a powerful note for folks, because I can tell you in other circles, we hear constantly, my credit got shot in my early 20s, or I don't have the generational wealth that Donna was talking about. And so I don't have a backstop. And so what other ways can we think about that? Robert, also in your world, from a CDFI perspective or otherwise, what is a system failure right now that you just feel strongly, if we're going to get advancing equity right, we need to change this, and maybe even a suggestion about how?
Yeah, thanks, Omar. And agree with everything with what Lauren said. So for us, it's the delivery system. And as Lauren mentioned, we saw it under PPP. Entrepreneurs of color were not getting the PPP loans, were not getting the capital that was being provided by the federal government. So a couple of things. First, the story. So we saw that. So we partnered. Collaborations are important, as Donna mentioned. So we collaborated with a company from Sean Combs called Our Fair Share. And his company created a website, particularly targeting the African American community, and drove people to that website because of his presence and his media presence. And we did about 228 loans that came from his website. 70% were Black entrepreneurs that came from that website. So we love that partnership that we had with Our Fair Share, and we're going to continue to partner with that company moving forward. So what systemically has to change is the delivery system. SBA has used for-profit financial institutions, no knock on Pamela Gabriel, Bank of America, to deliver capital and to a great success for a lot of businesses in the United States. But as recent events have showed, particularly PPP, that capital does not get to Black and brown communities. So we need to rethink how, at the federal level, at the government level, how we deliver that capital. Obviously, we cannot keep doing the same things and use the channels that we've used in the past. So I think solutions are organizations that are presenting today. I'm sure there's many that are listening. Is we need to think beyond just traditional for-profit financial institutions and use other methods to deliver capital.
Thank you, Robert, for that. And Donna, on the generational wealth, what can we change? What's broken, and how do we fix it?
Oh, let me tell you, I have story after story right here in San Diego County. And the one big story is repeatedly is the fact that ex-offenders can't get loans. And so here's what we do. This is systemic barriers like no other. Once they've done their time, whatever that is, and we ask them to come back out into society and become contributing citizens. And so many of them, because they can't get jobs, they open their own business. We have about 5 ex-offenders who have their own businesses that were pretty much actually thriving before pre-COVID-19. When COVID hit and it was time for them to get, some type of relief, financial relief, they couldn't, because the question is asked, have you ever, have you any criminal record? You're automatically, many programs automatically denied, even though that they've done their time. So what you've done is you've created a barrier for people who have already done whatever the time that they did, right? And they come out, they're now trying to be contributing citizens. And so this is again, another systemic problem, especially if you look at who is, if you look at incarceration rates, which is typically high and disproportionately high with Black and brown, and then they come and out of the system and try to be entrepreneurs. It's really, really tough. And what we do is that we actually put them right back in the system. So, these are just one example of how the chamber is trying to jump through hurdles and work through, create a different process and opportunity to help these ex-offenders continue to want to thrive in our society.
That is a powerful point, because we're in this moment, finally and thankfully, of talking about social justice and racial justice in important ways. And part of the criminal justice reform question, right? Part of it is bail reform, part of it is some of these things, but part of it is the point Donna just made, is what happens when you have dutifully served the time that was in front of you, and now you want to change, you want to do something differently. We put these barriers up, and I hope that resonates with folks as they go back to thinking about, okay, we need to think about a new system, and that's part of it. I'm going to ask another question here, but I'm going to bookmark one for you all to chew on before I ask the immediate one, because we didn't prep for this one. So it'll come later, but I'm going to ask you about the small business, the 1 to 10 employee business. We know that, for example, in San Diego County's second largest city, something like 90% of the businesses are less than 10 employees, like super small businesses. And many of those are owned by either Black or Latino entrepreneurs. I'm going to bookmark that one so you have time to cogitate on it a little bit, because I didn't tell anybody in advance, and actually want to just actually stay with Donna and ask you, you've undertaken an incredible lift over the last less than 60 days, obviously. As you look to what needs to happen for your members and the businesses that you work with to really benefit and transform the way they think, right, and the way they act, what's your sense of what the Central San Diego Black Chamber of Commerce is doing, and what government partners like the County of San Diego or others could do to facilitate that?
Mm-hmm. So one of the things that we're looking at is this is a great time, actually. In all of this chaos is, if you think about where innovation comes from, it's you want chaos in one way, not really bad chaos, but some type of push, right? Something pushing against you. And that's where innovation happens. And so what we're asking these businesses to do is to pivot the way they think, to pivot their business models, to pivot and to become innovative in a time like this. How are they leveraging social media? What are they doing to network? What are some of the challenges, and how do they push through those challenges? The one thing that never happens, I shouldn't say never, but I should say a lot for Black-owned businesses, is they don't have access to mentors. And so I think having business mentors and having mentors who have failed forward is critically important, because failure is, I can't tell you personally, have failed so many times and loved every minute of it, because I became even more critical. I started critically thinking very differently. And so these are some of the things the county and the city needs to have. They need to get rid of a lot of these social programs that they have and start thinking about business programs that help our communities. And so I think that just handing out grants and giving money away without any type of accountability, responsibility, setting up programs that really help businesses thrive and think differently, and really sending the message to communities, not just communities of color, but we have to start thinking about what the county and the city needs to think about. What are their own biases and their own barriers that are keeping these underserved businesses from thriving? Because the city and the county and the government are part of the problem, but they can also be a major part of the solution.
It's a great point. I see, Robert, did you want to chime in as well?
I just want to make thanks, Omar, a quick comment on what Donna said in terms of failure. And that is, if you are a Black or brown entrepreneur and you fail, it's this giant X, right? And if you look historically at non-Black and brown entrepreneurs, we hail white men who have failed and say, wow, look at that person. They got knocked down, but they got back up again. But if you're Black or brown, hey man, you lost, you blew it. You had your chance, So we need back to the systemic change. That's not even systemic. It's more of a cultural change of the way we think is, hey, this person failed, but they're getting back up and they're going to do it again. And how come you're giving that individual a break, but not this individual? So,
100%.
Oh, sorry, Robert, can I just tag on to that before, sorry, Lauren, to interrupt you, but this is really critical. We really need to stop this colorblind policy approach, because that's what it is, right? We need to have this color bowl. The county needs to start thinking about having an intentional focus on communities of color, and that they have a moral imperative to distribute resources based on racial equity. The more that we push color under the rug and say that we don't want to talk about it, and even have policies that say don't, you can't use the word Black, don't use the word brown. I mean, that is just insane. When the most vulnerable communities and businesses are healthy and thriving, then all communities are healthy or thriving. So let's start talking about it from a color and a racial equity standpoint. That is what the whole county and honestly the state is missing.
Not just the state, Donna. This is the whole country needs to get on board with this, and that's the topic today. Is not just investing in race, but investing in racial equity. And so if you're taking an equity standpoint, it says where do we need to level the playing field? Where are there big old divots in it that we need to make that smooth? So really taking that kind of approach, that's part of what we did. We are the deployment partner for the San Diego Foundation and the County of San Diego with their San Diego County COVID-19 Small Business Nonprofit Loan Program. Very descriptive, but a long name. But we're deploying $5.2 million of 0% nonprofit or 0% loans to nonprofit organizations in San Diego County. And we said, okay, how do we bring a racial equity lens to this responsive loan product? We pushed in the design, listen to everything that we heard from being in community during a pandemic is just, a lot of Zoom, but listening to what are the challenges when you tried to access this program that came out and got spun up in 3 days, why couldn't you access it? Who was not being served by it? And we took that feedback and said, let's fold that in and say, we're going to prioritize those organizations that are serving communities disproportionately affected by the pandemic, specifically naming who needs this capital the most, and put that into the preferences and put that into our outreach strategy and said, not just, I'm going to wait for whoever walks in through the open door, but I'm going to go out and make sure that you know about this program. It's what Susan on Robert's team did with the PPP lending. She said, I heard your story. I know that you need this, and I'm going to go to bat for you. And that's really what's been available to privileged white entrepreneurs. And that is why we've had this divide. And so we need to bring those tools that already exist, that we already put in practice, and bring them to bear on the communities that really need that support.
That's it. Those are powerful points, and your ability, and sometimes, frankly, it is the ability of folks who are outside of government where there's a little more flexibility to be able to do exactly what you're talking about. I want to just share with the audience, the County of San Diego undertook over the course of about a year, a deep dive into the procurement policies across the enterprise to really look at how to broaden who has access to county contracting and the ways that the communications occur. And the one good example, immediate example, in the context of the existence of a Prop 209 that has a very specific bar in the state of California on race-specific preferences in contracting, I want to lift up, the county is embarking on building another Live Well Center. And these are a large, essentially one-stop, not just shop for where you go to get services that you need, but also to be empowered and have things like workforce support and others all in one place. And in this particular procurement, our head of procurement, Jack Pellegrino, said, you know what we're going to do? In listening to the community, said we are going to tell these prime contractors, tens of millions of dollars contract, you need to put some of your own contract money at risk here in how many members of this immediate community you go to for subs, that they go to for employees, right? And the contract, the RFP included specific zip codes. Because it was local money, there was some additional flexibility. And it said, you present to us, contractor, what's the best you can do? And what ended up happening is the contractors actually competed against each other to reach and access those businesses. And the subs ended up being even greater than we typically see in the sort of, when you start with, it must be X% of this group or X% of that group, giving the contractors the incentive to compete with one another actually drove them to do more than was expected. That's just one example. And for anybody that's interested, who's listening, I'm happy to put you in touch with Jack Pellegrino. If your own entity, wherever you are in the state, or even if you're not a county or city, if you want to get in touch with your county or city, I'm happy to make that connection offline. Just ping me in the chat room. I want to go back to Lauren, though. And I had asked a question earlier, and then I'll come to Donna and Robert, about this 10 employee and fewer threshold, right? A lot of the money that comes out of the feds or even the states, it's small business. But if you're a 5-person employee shop, maybe you can't quite get there. And so I'm curious for each of you how you're thinking our system needs to respond to support for that very, very small business level. Lauren, do you have any thoughts about that?
I do. And to your point, I have stats on this because I love statistics and understanding what's going on in the county. About 80% of county registered businesses have fewer than 10 employees, 79%. So it's the vast majority, and entrepreneurship is that entry into wealth building. Research came out of AEO's Association for Enterprise Opportunity. They focus on micro businesses nationally, and they found that owning your own business is a bigger driver of wealth creation than owning a home. And so when you are a person of color, a woman, a veteran that wants to participate in generational wealth building, entrepreneurship is key. I lean heavily on our good friends at Accion, who focus on that starting a business space. They do incredible work in that, but we also think about where do we have voice? Like you said, as an outsider and somebody with many, many opinions, I often can say things that are not palatable from other organizations. And so I'll push as much as I can to say, here's what we see. Let me represent these voices that I have heard, I have listened to, and make sure that gets put into practice and policy. Accion does incredible work. They lend between $300,000 and $75,000, and they are continuously thinking, how can we reinvent what practices we have to best meet the needs of our community? And I think that's on all of us. I also wanted to lift up that Robert mentioned one of his systemic changes that he wants to make is, how does capital get deployed? Accion, CDC, Mission-Driven Finance, the Black Chamber, we're all doing good work, but combined, we're less than what Pamela can put out in she's one bank, right? So thinking about how these capillaries of capital deployment are, in fact, can become arteries. How can we actually drive more capital through these that are they're the bright spots in our community?
That's incredible. And I'm making a note of the capillaries of capital development becoming arteries. That's a very good visual. Maybe we'll go to Donna and then Robert. Donna, small businesses under 10 employees. What do you think? How do we get better about this?
Well, first of all, the Black Business Relief Fund grant criteria is 1 to 10 employees, less than 10 employees.
Wow.
So we are focusing on the micro businesses because they're the ones who need help. The mom and pop stores, the ice cream shops, the barber shops, the hair salons, all of those are less than 10. And so our entire grant criteria is less than 10 employees because we know that that's critically important. So they're the ones who are going to end up closing their doors first and can't get loans anywhere else because they don't have specific revenues, that revenue thresh. And so it's really critically important that that our banks start thinking through who their customers are. Because I'm willing to bet if you look at the customer base and they actually did a demographic study on their customer base, they would see that they have a huge portion of their business are small businesses. Yet they focus on their large customers and have private client, a whole division that you go into this room with glass doors for private clients. Why can't I be a private client? I mean, if I'm making $50,000 a year in my ice cream shop, I mean, that is what I think, the passive aggressiveness that happens in financial institutions. You have literally divided us by the haves and the have-nots. And so we need to start thinking through all of this. Thank you.
Oh, that's great. That's receiving some play in the chat as well. It is a great point, that concierge service. Why is it just reserved? And to the point that you and Lauren made, and before we go to Robert, I'll just say maybe this is one of the differentiating factors between the capillaries of capital investment, like you all, and the sort of larger entities. It's just a matter of scale and opportunity. Robert, did you want to chime in? Under 10 employee businesses, what can we do, especially to advance racial equity here?
Yeah, certainly, and appreciate the conversation. And Lauren, I love that capillaries, arteries, but as we all know, mission-driven lenders like us, we're actually the heart of the whole system, right? So in that, Omar, if you look at it, particularly for Black and brown businesses, 92% of Latino businesses or Latinx businesses are no employees, right? So they're sole props, one individual. It's 92 to 94% for Black-owned businesses. So we're not even talking 1 to 10, we're talking 1. So what do we need to do? It goes back to that systemic change, and a couple of things we can do. One, Lauren mentioned, it's the delivery system. How do we get more lenders into the field that are going to deliver to that? Because Donna's absolutely right. The large traditional banks just don't know how to play in that space. So what could we do? Hey, we just had a reform of CRA in the negative, the Community Reinvestment Act, how banks are judged. Can we put some things within CRA that banks are judged in regards to, hey, when you decline this person, this small business, what are you doing with them? They still have money in your bank. Are you referring them to Acción, to Lauren, to Donna? What are you doing? Should they get credit for that? Is that something that we can talk about? And then in terms of what the public can do, we saw one of the positive things that the state did was stand up a loan guarantee program for microloans with a 95% guarantee. So it's one thing to say, okay, mission lenders, okay, Lauren, okay, Robert, okay, Acción, you're going to do all those really, really hard loans that nobody else wants to do. That may have a higher failure rate. Well, what's the public sector going to do for us taking on that additional risk? So credit enhancements is the fancy term, but it's guarantees or additional loan loss reserves, or it's equity into our balance sheet. So if we could get more of that, we can see that. And just the last point I'll make is, because we run one of the loan guarantee programs, the one in San Diego, is when the state stood up this 95% loan guarantee program, no traditional financial institution has done any of the loans. It's all been us, the MDFs, the Accions, the opportunity funds across the state of California, all the nonprofits, lenders, no traditional financial institution has done a loan under that program. So again, we are the heart. I go back to the heart.
Yeah, it's a good point that like you said, the work is being done at the immediate level by the organizations like yours. I mentioned that the county of San Diego has this Livable San Diego vision of every person in the community being healthy, safe, and thriving. And that thriving part is one of those things that really gets into the social determinants of health, which it can seem to many people, like, again, why are we in an economic room talking about health? But we know, for example, right, that poverty impacts health, that the stress associated with where am I going to work, how am I going to physically get there from a transportation perspective, impacts things like air quality, which comes back to impacting health. I think it's a powerful number. And then I have a couple more questions, and then we'll wrap up here as we're getting pretty close. LA County did a really impactful study. They took millions of records from their social service safety net databases. They hired a group called California Policy Lab to run artificial intelligence on these millions of records. And they looked at over 200 variables to determine what is most predictive of homelessness. And what they determined that most predictive, above all else, is called the Area Deprivation Index, which is at its core a measure of how much poverty is concentrated in specific census tracts in our communities. That Area Deprivation Index is a clear link between health and thriving. And so it's just really, really great to hear from these panelists, because to Donna's point, as you lift up generational wealth, you start to change that. And Donna, I wanted to ask you, actually, you mentioned the loan fund that you have, and I just want to ask you, if you don't mind sharing, how do folks that are in San Diego County get access to that, and any tips in terms of how you're thinking about it moving forward?
Yes, and so here's two things really quick. First of all, if you are interested in being a grant recipient, please go to www.sdblackchamber.org. So go to our website. If you just Google San Diego Black Chamber, and the page will pop up. If you're interested in being a donor, yes, that's what we like. Please go to the same page, or you can reach me personally. But I'll also put it in the chat. I think it's incredibly important. We have, $1 million to get rid of, to push out, and to make sure that businesses are, like I said, not just recovering but thrive. The grant criteria is there. And you will absolutely, there it is. I think someone put it on there. That's correct. And all the information is on our site. But please reach out to me if you're interested in donating. I think that it's critically important that businesses help businesses. And I certainly, for the people, the panelists that are on this call, I would love to be partnering with you, all of you, to see how we can collectively and collaboratively work together to make it better for all of San Diego businesses.
That's great. And with our last 2 minutes before I turn it back over, just quick 30-second snippet, Lauren, Robert, and then closing out with Donna. Lauren, what is the one or two most critical takeaways for people to advance racial equity?
It sounds like it's like a no-brainer, but I think the most critical thing to advance racial equity is to really see everybody in our community as a neighbor and not see them as an other, because that will shift how we put things into practice. It will shift who you design for, who you think about. So make an effort. I show up, I met Donna right before COVID at a Black Chamber event. I was the only woman that was not Black in that room. And that's part of why I participate, is I want to be in community with my community, and we all need to do that work.
That's great. See people, that's a powerful point. Robert, biggest takeaway?
So it's what Donna said about the colorblind, is it's okay. Let's talk about, let's have those conversations. Let's see where we're at and understand the past, but work together and move forward and understand that equity is going to take a lot of work, right? But we need to do it, and we need to have those, what we call at our shop, fierce conversations.
Fierce conversations to stop being colorblind. Donna, 30 seconds. Close us out.
5 seconds. We forever, we've always talked about equality, right? From a gender perspective, ethnicity, but this is the time that we need to start talking about equity, because equality can't happen if we don't have equity. And so the more that we can push an equity framework and be authentic and transparent of the challenges that are happening for people of color, the better that we can as an economy. We're all here to bring a vibrant economy into San Diego County. And the way that we're going to do that is that everyone needs to participate in it from an equity framework.
Thank you, Donna. Thank you, all of the panelists. I want to go back to Carlos now to close us out. Carlos, are you still with us?
Yes, thank you, Omar. Thank you, everyone, for joining us, our speakers, our attendees. And just want to put a final evaluation poll as a friendly reminder for folks. San Diego Grantmakers uses this upon our programming, so I appreciate you taking a few minutes to complete this. And once again, thank you for joining us. It was a very illuminating conversation for me. I have a lot of takeaways to speak with my colleagues and friends about, so I want to thank everyone for participating.